One of the things that really focusing on the newer investors, the ones that may be struggling or stuck or frustrated, one of the things that I think a lot of them do wrong is, frankly, I don't, it's not necessarily shiny object, but they're just not focused enough. One of the things that I preach, obviously, this notion of a buy box, but it's even more than that. I don't really care where it is. I don't care if it's, you know, next door or on the moon. I don't care how far away it is, but you've got to be consistent. If you are in the real estate game, the real estate investing game, one of the things you quickly realize is a lot of the data sits in lots of different systems. You could have some title, some code, some pricing, some actives. It's all kinds of data everywhere. Something I've had a lot of fun watching over the last 5 years is companies being created to aggregate and interpret and then predict. And we have one of these brand new companies, Bright Investor, with us today. Donato, how you doing, buddy?
Great. Thanks for having me here today.
Absolutely. Why don't you tell us the mission or the vision for Bright Investor and go back to before a line of code was written? What were you seeing in the marketplace? You're like, this is a big problem. We need to fix this.
Yeah, it came from my own personal frustrations with trying to buy real estate across the nation. So I was getting into the real estate investing game, and one of my biggest fears was making a mistake and buying the wrong property, the wrong location. And when I was trying to get started, I was told that it takes a lot of reps, a lot of volume. I had to look at a lot of deals to find one that works. And so every time a realtor would send me a potential deal, or a wholesaler would send me something, or I'd find some off-market property, I had to start from scratch to figure out, do I like the location? Do I like the numbers? It was a very repetitive process that was taking me a lot of time. And at that point, time is money, and trying to get that flywheel started, I found myself getting discouraged because I had to start completely over every single time a potential opportunity arises. And for many people, that stops them from getting started in real estate or continuing, which is why I knew there was a problem to solve.
There you go. And what year roughly did this epiphany come to you? What year was that?
This was 2021.
Yeah, 2021, I can imagine, right? 2021 was one of the hottest markets I have experienced. And if you took a breath, the great deals were gone. And if you had to go through, exhaustive analysis, even if you did it efficiently in 3 or 4 hours, let alone 2 or 3 days, the great deals were certainly gone. And probably the good deals were gone also.
Absolutely. And it's something too, when you have folks who are getting started in the industry, a lot of it is just confidence. I might have a great deal in my lap, but I don't know how to read the language that deal is, talking to me in, or read that language of that book. I'm not going to be able to capitalize on that. And for folks who are growing their portfolios and are scaling, if they can't say yes or no quickly, or if they can't scale up by getting the right, capital partners involved, it becomes a very difficult process to compete as you get larger and larger.
Yeah. One of the things that really focusing on the newer investors, the ones that may be struggling or stuck or frustrated, one of the things that I think a lot of them do wrong is, frankly, I don't, it's not necessarily shiny object, but they're just not focused enough. One of the things that I preach, obviously, this notion of a buy box, but it's even more than that. I don't really care where it is. I don't care if it's, you know, next door or on the moon. I don't care how far away it is, but you've got to be consistent, right? One of the things that frustrates me is you get a new investor, they're all excited, they go on Bigger Pockets and they hear about Cleveland, Ohio, and they're on Cleveland, Ohio for a minute. And then they hear about Huntsville, Alabama. Then they hear about dollar houses in Detroit. And then they're, oh my gosh, we got to do midterm rentals in Nashville or whatever it is. It's just, you all need to slow down. You need to realize that, in my opinion, real estate investing is a skill. And the only way to get better at the skill is repetitive, consistent, focused execution. So, one of the things that I know I want to see inside Bright Investor, once we bring it up, is I want people to declare a buy box, right? A zip code or criteria, whatever that is for you. And then I want you to go ham. I want you to go deep on that area and figure out all you can, because you can't do that in five places, dude. You can't learn German, Spanish, French, Italian, and Chinese at the same time. Your
Mhm.
brain will blow up, right? You've got to focus and call your shots. So, one of the things that I hope to see inside Bright Investors is, how can a focused newbie go deep in their area. That's one of the things that's important to me.
Absolutely. And I see that all the time as well. After doing, hundreds of hours of webinars and interaction with folks who are getting started in the real estate space, a lot of ideas about different markets, which is fine. It's where you should start talking to people, see where all the folks are investing, but then it's the constant bouncing back and forth. And so when I ask them, why are you investing here? And they'll say, oh, well, I heard about it. Like, okay, great. Why? Why
Yeah,
does it make
yeah,
sense for you? Why are your dollars going here?
yeah,
And what I'm expecting is them to say, well, I know that home values are about this, and I'm buying at this price point, and I'm looking for this type of property, and I found this deal that makes sense. But if all you can tell me is, well, this guy told me I should buy there, one, you're going to end up losing a lot of your own money. And
yep,
two, you might lose a lot of other people's money if you have like a spouse or a friend or a partner. Like,
yeah,
guys, it just does not make sense to do it that way.
yeah. I couldn't agree more. Guys, in the beginning, focus, 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 focus. All right, so you take on this mission in 2021. I have no idea. How does somebody even start a software company? Do you go to Fiverr and get some engineers? You know people, or are you doing this all yourself? How does somebody launch a tech company these days?
Well, to start off, it's with a lot of ignorance and how hard it's going to be. That's how you first start.
I got this great idea. It'll just happen tomorrow.
Yeah. So I was graduating college in 2021, and one of my core classes that was had to do with mapping and data. And one of my projects was make a map with data of something you care about. Like, oh, I'll make a map about real estate and looking into a market like St. Louis, Missouri. And so I did that, and I spent all this time making this prototype. And it wasn't until I graduated that I met my eventual co-founder on Facebook. And he had just finished up a 6-month internship program with Brandon Turner out in Maui
Hmm.
and was looking for other young real estate investors to connect with. And so we started talking. And basically, after about 2, 3 months of chatting, I said, hey, I have this idea for a project. Let me show you what I've been working on. And I shared my screen and, demoed my prototype for him. And at that moment, he looked at me and said, Donato, I promise you're not going to believe me, but I'm working on the exact same thing. And he showed
Ah,
me his screen, and he was working on the same product from the other end. And it was
interesting.
complete random chance. And we thought, wow, okay, we have to do something with this. So he knew a guy that was in the project management space for IT. That guy went out to the marketplace and knew some developers that he happened to work with in the past. One of them was his old college professor. So we
Hmm,
ended up hiring the guy's old college professor to work for us, raised
that's
our first
awesome.
little money from friends and family, and just started coding January 1st, 2022, and said, we'll
Nice.
figure it out. It's been
That's
2.5 years
awesome.
since then.
That is awesome. That is awesome. I'm curious, when did you release it to the wild? Maybe a beta version, whatever you called it. So you start coding in
Yeah.
January 22. When's it go live?
We went live March 28th, 2023. So it took 15 months to build the full first
Yeah.
version.
That's actually pretty good. That's pretty good.
Thank you.
Yeah, yeah.
It's
15 months from idea,
yeah,
whiteboard to out there, huh?
yep. And then since then, oh man, we've gone through it took 15 months to build version one, and I think in the next 15 months we built up to version five. So we have
Quick
iterated
iteration.
quite quickly. Yeah, and just building it up and scaling it to what people what the customers and tell us that they really want and need.
Awesome, awesome. Well, now that we've gotten here, why don't you tell us what Bright Investor is today, what people can get from it, and of course, we'll show it in a minute. But if you were talking to a prospective client, somebody in the one rental at a time world, what would you tell them to expect before we dive in?
I would say that Bright Investor is helping make sure that each property is the right property for you, your family, and your financial future.
Okay.
So that talks about things such as choosing the right market, to being in the right area in that market and knowing why, to then looking for on and off market opportunities, and then being able to establish their value, figure what they'll rent for, even get insurance policies so you know how much it's going to cost you to insure the thing and run your numbers in as little as 30 seconds from
Hmm.
start to finish. So it's extremely streamlined process to help you never buy the wrong property again and build your portfolio with confidence anywhere in the country that you see fit.
I like it. I can sort of visualize as you were going through that a nested logical flow. All right, so Donato, why don't you show us this baby of yours? This is version 5, and we'll go through that the whole process that you just walked through. A new investor in a new market.
Let's do it. So I will play with actually another fun market in Ohio. I hear a lot of people talk about Ohio, and often things are tossed out like Cleveland or Columbus. Another one I
Hmm.
get a lot is Dayton. And
Okay.
so folks will ask me, well, Donato, should I invest in Dayton? I'm like, well, let's use what I call the market research framework of recap.
Hmm.
So if I look at a market like Dayton, one of the first questions I ask is it appreciating? If we're going to buy real estate somewhere, I'd much rather ride the wave than try to fight the tide. And so I tell people I highly recommend you invest in markets that are appreciating at least 2% per year. Pretty
Hmm.
low compared to the last couple of years, but at least 2% per year. And target zip codes that have been gaining value at
Hmm.
least, 2% per year and not losing value.
Okay.
Now, very quickly, Dayton's home prices are up 97%. That's the end of 2017. That averages out to 11% per year, which is insane. So
That's pretty
definitely,
crazy.
yeah. And one thing I love pointing out to people is this little graph right here. Because I want to know, well, COVID-19, it happened. There's a huge, crazy spike in home prices.
Mm.
So I want to know what happened before COVID, during COVID, and then what happened since interest rates have increased. And
Mm.
has appreciation remained consistent? So when I look at Dayton, Ohio, home prices were already on an upward trend before COVID hit, went on a tear during COVID, and since interest rates have been higher, they've continued to have an upward climb.
Mm.
So when I see that, I'm seeing ABC home prices going up before, now, and later. That tells me that demand is likely going to be strong in this market and it's not necessarily a pump and dump market where home prices skyrocketed and came right back down.
Gotcha. Okay.
One of the next things I'm going to look at is employment. Plain and simple, a lot of folks don't recognize the importance of being in a market with a diversified economy. And I love picking on markets that have a really high oil and gas industry,
Mm. Yeah.
where it's great when price per barrel is super high, but when price per barrel goes really low, and all your tenants leave because they're workers in that industry, they got to go somewhere else. You're the person with the vacancy problem. So when I look at markets like Dayton, I see that it's grown about 6% over the past decade. And my rule of thumb is about 10% over 10 years, about 1% per year. So it's not growing as employment as fast as I would like, but it is still growing. And when it comes to employment industries, I'm looking for stable, diversified employers.
Mm.
So things like education and health, trade and utilities of the city, government sector, professional business services are all diversified economies that provide long-term stable employment. And I'm really looking for is that no one industry is the absolute standout dominant.
Mm.
So I can
Makes
check my
sense.
chart here. Education and health, schools usually don't go out of business.
Mhm.
Hospitals usually don't go out of business. It's our dominant industry, but it's not so much further ahead. There's a very stable first, second, third, fourth place here, which makes me feel more confident in the Dayton, Ohio market.
Okay.
One of the third components is actually rent growth. So, hey, if I'm going to buy somewhere, it'd be nice to know if rent growth in the entire city is going up, down, how's it performing? So, for a two-bedroom apartment, in this area over the last couple of years, I think it's useful to know: are we trending downward? Are we trending upward? What should I be expecting as far as long-term growth here? Because if we're getting into a market where over the last 12, 24 months, we've seen a lot of rent declines, it's probably indicative of an issue with demand or supply or things of that nature. Let me go ahead and try additional time. This. So, like in downtown Dayton, for example, over the last couple of years, rents are up 47% in downtown
Wow.
Dayton. They were trending around 1,037, and now as of this month, they're at 1,532. That
Got
is
it.
incredible. 47% rent growth in a single zip code in just 3 years.
Wow. That's bonkers.
So when I see that, I think, you know what? That's not too shabby.
Mm.
I can definitely see that working out in my favor long term.
Okay.
So at a high level, I know that appreciation is solid. I know
Could
that
you do population for me since I see that button?
yeah, absolutely. This is one of people's favorites to look at, especially for markets like this. So My rule of thumb here in population is also 10% over 10 years. And the reason I look for that is, like we said, that real estate is a skill. Well, I see real estate as a service. And we, the landlords, are business owners. Our service is providing housing to willing and able tenants that it's safe, clean, and affordable. And so when I'm looking at an area that to choose to invest in real estate, whether that's a one specific zip code or that's one specific marketplace, if there are simply fewer and fewer customers every single year through population decline, I'm
Hmm.
going to have a harder and harder time getting the rents that I need to be competitive or to cash flow.
Hmm.
On the other side of that equation, if I can get into a zip code or a market where the customers are growing every single year through population growth, I have more and more demand for my product and I can charge a higher and higher premium. And I'm going to have less and less competition to actually get my units filled with the kind of qualified tenants that I really want to be in there.
Right.
So population growth as a metric, I find is exceptionally critical on not just a market basis, but a zip code for this exact reason.
Hmm.
Because over the last 5 years, you see how perfectly that timed out. My entire
Yeah.
speech was perfect right there. So
Done
I've
this
done
a
this.
couple times.
I've done this a couple times. So the reason I say this is because, hey, Mike, I'm listening to Dayton, Ohio. Oh, that's awesome. Did you know that almost the entire east side and the entire west side of Dayton have been losing people as much as 43% of their population?
Wow.
That's not great.
That's
But
not
the
good.
entire but the entire north-south corridor is really growing.
Hmm.
Isn't that
That's
interesting?
interesting.
I can actually see north to south is growing, east to west is shrinking.
Hmm.
So if you tell me you're investing in Huber Heights, okay, great. Population is larger there, but it's shrinking
Right.
compared to, say, this zip code, which is up 56% in the last couple of years. This is where the demand is.
Yeah. And again, if I was a new investor, right, I just heard about Dayton in this example and I saw this. The next thing I would be thinking is like, all right, great. What's going on in 45420 zip code? Because it could be lots of things. It could be one big employer coming in. It could be a new housing
Mm-hmm.
development. I mean, who knows? But again, what you're looking for when you're at the highest level of a marketer is where do you need to dig deeper, right? What's an outlier?
Exactly.
So, yeah.
So when I find a zip code like this, like, hey, population growth is clearly doing well here. I'm interested. Then we start getting more specific and say Dayton as a high level market definitely piques my interest, but I need to know more.
Hmm.
So I
Okay.
want to get more specific about this particular area, this zip code. And one
Got
of
it.
the first things I do after seeing population growth like that is I look at income growth. And
Hmm.
income growth is up almost 25% here. We're seeing a tear on income going towards
Interesting.
40,000, 50,000, 55,000. So we have more and more higher income folks who are moving into this area. Now, it's
Interesting.
not like an
Okay.
80, 90, or $100,000 zip code where it's exceptionally high income, but a lot of middle class earners that are making more and more are moving here.
Yeah.
So then
Yeah.
I break out my secret sauce, one of my favorites, rent to own ratio. You want to talk about knowing what's happening somewhere? Well, in this part of town, 14 years ago or 12 years ago, 41% of the housing was occupied by renters.
Okay.
59% was occupied by owners. Now, 38% of the
Hmm.
housing is occupied by renters, and 62% is occupied by owners. So, over the last 12 years, there's been a shift to owner occupied housing, telling me that more people are moving here, buying houses, living in them, raising their families.
Hmm. I like that.
This
Yeah.
this is trending in a direction where, hey, people are wanting to spend their time here.
Right.
So
Yeah.
the first thing that
Let
pops,
me
yeah, go
just
ahead.
stop you there because I think one of the things, as a software guy myself, that I don't think the audience knows, you've been pulling data probably from dozens and dozens of different sources. And I don't think we've kind of stepped back and acknowledged that, right? Let's think about what you've done. You've got population, rent, price, jobs, rent to own, all of this stuff that you've pulled together in a single repository. How many different sources roughly is Bright Investor leveraging for all of this? Because I think we haven't highlighted how powerful this is.
Dozens, dozens of sources. And we think the things we do is we go out to all the biggest providers of real estate data, both private and public. And I personally negotiate agreements with them to bring their data here. So it's not
Mm.
just public data, it's not just private data, it's everything together in one place that we pay for access to. We do all of the analysis, all the aggregation, and make it a simple one-click answer to get exactly what you need. So short answer, a lot of places.
Yeah, because again, I don't think people realize that you're sourcing data from other places. It's in different formats. You have to clean it up. You have to tick and tie it so it's hey, down to the zip code level. Um, we haven't even hit crime or schools or any of this other new listings. There's so much here, and I could just think all this is data. All this is different places. And putting it in one place is shouldn't be missed because everybody could get this information on Dayton, but it wouldn't be easy, wouldn't be fast, it wouldn't be the data would be lagged out. It would be such a mess
Yeah,
that you would never get all of this. So kudos to you for doing this. That's crazy.
thank you. And that's what I find. Like, imagine, okay, great, I have one property in this zip code of Dayton, Ohio. You think you know Dayton, and then
Hmm.
the next day someone sends you a property in the clear other side of town.
Yeah,
Well, start from scratch.
yeah,
Go do it again. And it's
yeah.
just not fast. If it's not fast and it's not easy, people won't do it. And
Well,
so if I want more,
this is my rant in the beginning. I keep telling people they don't get it. When I started real estate investing for 3 freaking years, I looked at 93703, 3 or 4 bedroom houses, 2 baths, 2 car garage between 1250 and 2000 square feet. That's all I looked at. If you sent me something on the other side of town, or a 2 bedroom or a 5 bedroom or a condo or a fourplex, I didn't see it. It didn't even hit my radar. And that's what it takes to get good at this is freaking just focus.
I love that. I'm going to take that. I'm going to apply it right here. So let's say someone wants this zip code. This is the one for
Yep.
them.
Yep.
Well, I'm going to tell you right now what's happening in this zip code as far as what kind of properties are prevalent. 72% of the market here is single family detached houses.
Oh, look at that.
And you got about 6% of the market is single family attached. And you got a couple 3 and 4 unit buildings. But overwhelmingly, this is single family house territory. But let's get deeper. What
Yep.
kind of houses?
Okay.
So I want to know when I go to my bedroom count, okay, most properties here are single family houses, and most of those houses are 4 bedrooms. 40% of the market are 4 bedrooms, another 35% of the market is 3 bedrooms. If you're buying here, 3 to 4 bedroom single family houses and 45420 is the dominant type of real estate in this market. That's what you're shooting at
I
in this
like it.
marketplace.
Okay.
And want to get a little bit more specific in that, the kind of property I'm looking to buy vintage wise, well, most of these are 1940s and 1950s product, even 1930s product.
Oh my goodness.
The vast majority of my product is going to be almost 80 years old. And
So how much
very
is
little,
new construction like the last 5 years? Nothing. Oh my
yeah,
gosh,
just about,
1%?
yeah,
Oh,
less than a
less than
percent,
1%.
less than a
Jeez.
percent. That's the last
I would
census.
I would
So
not have guessed
I'm
that.
buying 1940 to 1960s 3 and 4 bedroom single family houses in this zip code where the median income is going up by 24%, where the
Hmm.
population growth is positive, where the home prices are appreciating. I
Hmm.
know this now, and I haven't even gotten down to the street level data. So if I'm looking at this zip code, I already know that I know that more owners are moving here. I'm expecting that's because people are moving here to raise kids,
Hmm.
and so I'm going to check out. Well, are there good schools nearby? And when we know that schools are ranked from this provider's grade schools 1 to 10, so 10 being the best schools in the nation,
Okay.
7, 8, 8, 8, 9. There are amazing schools in this Belmont to Beavertown district of the zip code.
Hmm.
Amazing. This completely backs up everything we're seeing with more owners, higher appreciation, population growth, and income.
Okay.
Everything here is making sense. And when I look at, one of my personal favorites, right, is to look at nearby franchises and businesses and say, you know what, if I'm going to buy over here, has Starbucks already, put in their
Nah.
chips?
Yeah,
Hey,
exactly.
has Target put in their chips? Yes, they have. Has Trader Joe's? They have. Has Whole Foods? No Whole Foods yet. That's a value add. We can always get there.
Uh,
Has Chick-fil-A thrown in their chips? They have. And so I'm looking at all the different high income demographic facing franchises that people know, like, and trust, that they want to live near. Are they in this area?
All
The
right,
answer
do
is yes.
McDonald's. Let's throw on McDonald's. Let's just see.
Okay, throw McDonald's out there. Lots of McDonald's. Boom.
Yeah,
Now we
there
can
you go.
buy. I'm good to
There
go.
you go. That's right. Okay, I like it. That's pretty cool.
And when I do my little crime check over here, one of the things I'm doing is I want to know not just is this an A or B area. I want to know there's great schools nearby. I know there's a lot of information. Where's the crime situated? So
Mm,
not only do we know that crime as a kind of heat map is up more towards downtown Dayton and further away from the good schools, but the type of crime we're experiencing is completely different. Whereas in downtown Dayton, I'm getting simple assaults, I'm getting motor vehicle thefts last month, even weapon law violations of people discharging firearms. And as I move back down south towards the nicer schools, I'm getting the occasional larceny, disorderly conduct, someone, let's see over here, counterfeiting attempt this month in October. But both the frequency and type of crime is completely different when I look at downtown Dayton. And as I go more south towards the areas that have the better schools, close to the targets. And so now I know, hey, I kind of want to target this zip code, but more specifically, I want to target south of Patterson Road down
mhm.
towards East Stroop Road. That makes a
Okay.
lot more sense for me to stay away from the crime. So
Oh,
now
okay.
I get to the easy part. I say, great, now it's time to even look for deals.
Okay.
Let's say I'm looking for those single family houses that we found earlier. I'm looking for properties that are motivated. So let's say I know the home prices in this area. I want to pay between $50 to $300,000. I want to find someone that has a 3 bedroom house, has at least 2 bedrooms, and I want to be a motivated seller. So let's find someone with high equity that's a landlord in this part of town. And I've got 264 off-market properties in this part of town that have been owned for multiple years that are high equity landlord
Hmm.
owners with 3 bedroom, 2 bath houses.
Hmm.
So let's say I choose one of them and the fun begins.
Right.
With the property, I have my bedroom count, my bedroom count. I know how much the seller's motivated based on are they an out-of-state owner, they're high equity. I got their name. Hi, Carl. Hope we're doing well in Colorado.
Got it.
I know this guy bought it for cash. He has no loan on this thing almost 10 years ago, back in 2012. Bought it for $20,000 from the bank. I bet you this is a foreclosure. Oh,
Yep.
yep, right there. Foreclosure. I know the comps are telling me that this property is worth about 254 based off of recent sales. And a 3 bedroom, 2 bath in this area rents for about 1,800 bucks. Without having to call my insurance guy, I know that a landlord insurance policy is going to cost me $74 a month for this property. So I wrap all that together into my long-term rental analysis. If I were to take this property, buy it for its estimated value, what $200,000, 20% down at today's interest rates, spending a little money on the rehab up front, renting it out for what we know we can, paying for water, paying the mortgage, paying for taxes, paying for insurance.
Well, let's get
This
rid of water
property,
because the tenant would pay for that. Let's get rid of water.
sure, get rid of water. And let's say
Okay.
we, and if the property's in great condition, maybe we don't hold back 7% of the cash flow. Maybe we hold back 3%. Maybe instead of 7% for vacancy, we hold back 3%. Maybe for CapEx, we hold back 3%. And now I have a cash flowing property of $250 a month, 7% cash on cash return. And so I have just gone from do I like Dayton
Hmm.
to do I like this zip code to do I like this area in this zip code to what deals are available for me? What are they costing? Who's the owner? What's it worth? What will it rent for? What will the insurance cost me? Will it work as a long-term rental?
Hmm.
And I can run it as a midterm rental, a short term, any exit strategy that I want to see if it makes sense before hopping back over here and getting their phone number for free because we offer 100 free phone numbers per month to every person that uses Bright Investor. I can click this button and can skip trace them and give them a call and say, Carl, I love your property. Will you sell it to me?
Hmm. Interesting. Okay. All right. Do you also do like mailers and stuff like that, or just skip tracing?
We just do skip tracing for now, but we find
Okay.
well, we allow people to export leads
Yep.
out of the platform and go do the searching. So
Yeah.
for now,
Makes
we
sense.
just do those types of things. But we find
Yeah.
that for a lot of folks who are getting started as well, it's a
Mhm.
lot easier to stomach
Oh, for
a
sure.
cold call as opposed
Hmm.
to like I'm going to drop $3,000 on mail to
Oh, for
go and
sure.
mail it to them.
Yeah.
So the barrier of entry is lower. So we've gone that route so far.
Yeah, well, let's be clear. I think a lot of my folks may be intrigued by wholesaling, right? Direct to seller stuff, but most of them are probably going to at least learn on market. So could you flip this from off market to on market to see what's popping?
Absolutely, I can. So say we got a single family house that are on market, three
Hmm.
bedroom, two bath, call it underneath 300 grand. And let's do a search. And I've got 36 properties that are on market that meet my criteria.
All right.
Check
Do
them
you
out.
also have days on market?
Let's see here. Do I have days on market right now? I do.
Yep.
Let's
So let's
do
do 30 plus. Yeah.
got one. There we
Okay.
go.
So this is what I would do as a full-time employee is I would be searching for, again, you got to know the market. That's your job. Days on market. And I'd be looking at stuff over. So let's click on this and see what we find.
Let's do it. Also, it's a great point there. Let's know days on market. Since you brought it up. In
Yeah,
this
why not?
in this zip code, right? The average
Okay.
days on market right now, so we know exactly, hey, what are people trending up? Are they trending down? Is about 28 days.
Okay, cool. So
Perfect.
anything over 30 days
It's
is,
looking good.
longer than normal. All right.
So I'll pull that back up. Let's do that 30-day mark. And we'll do that search again. I got a couple more this time. All right, let's do this one. All right. It's property listed a while ago. Let's see
Wow.
here. It's
Owned
well,
by an
of course it was a
LLC.
owned by LLC. Yep. Just
Oh,
purchased it.
just bought it. Oh, they're trying. So this is
Yep.
a flip. That's what that tells you.
Actually, no, I think it was a death.
Oh, death. Where do you
Yep.
see
The
that?
estate of. You see
Oh,
that?
oh, I do now. Yeah. Okay.
Yeah, it's passed away.
All right.
Being
So
listed
there you go.
by, yep.
And you have the
Comps put it
listing
at,
agent.
oh,
Yeah.
rock solid at 285. Yep. Rent comps there, 1800 bucks. Got my insurance for 100 bucks a month. Throw in the old analyzer here. Bill back water sewer. Not at their price.
Yeah, exactly. But that's
I'll,
okay. I mean,
I'll,
this is
I'll
all a start. Yeah.
yeah. So you know what? We'll knock it down and say, you know what happens if I offer 240? Not quite, not at your price.
Exactly. Yeah.
And
I think
then
they
you know,
bought it for 225. So let's do 225.
let's do it.
Yeah.
Almost, depending on how we want to budget our repairs and vacancy, we could probably get there. We want to be now we're being a little aggressive here. If I go
Well, you
zero
could also
percent
you
for
could also
everything,
put 30% down. You could put 30. I mean, you could
that's true.
always when in doubt, put more down.
30% down. Now we're making a little bit. Now we're making a little cash. Acting
Yeah.
a little
These
bit
are
of
all
numbers.
these
It
are all
breaks
things
even.
that
It breaks
people can
even.
play with. Yeah.
So every time those agents say investor special, well, it took us about 15 seconds to figure out. Sure, if you give me a $60,000 discount, don't mind
Yeah,
if I do.
exactly. Well, that's clearly the property's not selling at 140 days on market. So
Hmm.
it makes total sense. So very,
Absolutely.
very cool. Very, very. So I think
And so
there is so much here for folks. They really got to play with it. Is where does somebody go? I mean, do you have a trial or a recording, or how do people play with this?
yeah, so we have a 7-day free trial. It's limited access. You don't get all the bells and whistles that we, I know most folks get to check out. But then we do host different webinars where we
Okay.
can come on and watch folks use it. And we have a whole video archive of over 30 hours of training and how I leverage this to find markets across the U.S. and how to analyze deals. So lots of resources out there, and we're always helping more investors learn about this and get after it.
So I think you created a code for folks if they wanted to go past the 7 day trial for us.
Absolutely, we did. So, for anyone that wants to hop onto Bright Investor and start using it to find that right property, never buy the wrong one again, you can use the code ORAAT or is one rental at a time. So, ORAAT. It's going to give you half off your entire first month of Bright Investor when you pick the monthly membership, or they'll give you 25% off your entire first year when you go for an annual membership. So, lots of savings to leverage this platform and get on your journey.
And it's just brightinvestor.com, correct?
Brightinvestor.com, that's us.
Brightinvestor.com, folks, 7 day trial. Any closing thoughts, Donato?
I would say if you're someone that is absolutely dedicated to making real estate the thing you want to focus on for the next year, 2 years, 3 years, I have done everything in my power to put it in one place to make you as successful as possible with the least time spent away from your family, your hobbies, and your life. Only question I'd ask you is, what are you waiting for? Let's get started. Let's make it happen. Because I think that this is the one place you can go to get everything you actually need to go start closing deals.
And one more time, they can go to brightinvestor.com, see these recordings, webinars, see your schedule of upcoming ones. Because again, I think a lot of people will be interested based on this, but there's likely so much more that they want to dig into. So, folks, go to brightinvestor.com, use the code ORAT, ORAAT, if you want a discount. Otherwise, you know what? Just go get the trial. Go play with it a little bit and let me know in the comments. Let me know in the comments below. Did you give it a shot? What'd you think? Questions? Love to hear with you. There's so many options out there, a lot of data sources. Again, I think there's got to be dozens and dozens you're getting because think about crime and schools and franchises and population, just all the different data sources. It hurts my head thinking about where those come from. So, Donato, one more time, what's your closing thoughts?
Closing thoughts, I'd say Bright Investor is designed to help you buy the right property every time and not avoid those mistakes that plague us, especially as new real estate investors. If you want everything in one place to make it as easy as possible to go start making money with real estate, Bright Investor might be for you. And I hope you enjoy it after 3 years of putting it all together. So I'm here to help. We're here to support and let our journeys, let our mistakes, be the building blocks you use to build your portfolio, and we all become brighter investors.
There you go, buddy. Thank you. Great job. Seriously, the spaghetti that you had to deal with all these data sources, it hurts my head, man. It just hurts my head. Congratulations. Nice job.
Thank you very much. I appreciate
Mhm.
that.